welcome into this week's edition of the Research Corner. I'm Tony Mulvey, joined by Kevin Hill. Kevin, how are you this morning? Oh, I can't hear Kevin.
Oh, you can't hear me?
Oh, there you are. I got you now.
Oh, okay. They're trying to cut me off, I'm sure, because I'm probably going to mention the New York Mets beating the Atlanta Braves 4 out of 5 this weekend. So they're muting me. They're censoring me.
I was going to say, it was a pretty dominant performance by the Mets this weekend, that's for sure, other than the one, Friday night. But what we're going to talk about, we just put out a paper this morning covering Q2 earnings, but kind of breaking it down across various modes. We've talked a lot on here about truckload carriers and brokerage, how their earnings results were. We're going to change it up a little and look more in the warehousing space and the LTL market, right? And we've got Prologis, one of the largest, if not the largest, warehousing company in the country. I mean, they're making moves to purchase. Earlier this year, the Duke Realty acquisition was announced. So they're wanting to expand their footprint. It's a lot easier to buy than build in this time frame. But you start looking at why they might be doing that. The warehousing market's really hot.
It is hot. And you mentioned the Duke Realty acquisition earlier this year. That was $25.6 billion. Two of the largest commercial real estate players combining. So it's a hot market. Prologis comes out with their occupancy and leased figures each quarter with their earnings, and this quarter didn't disappoint whatsoever. I mean, we're at what was it, 99 or 98.6? There we go. Here's the graph: 97.7%. 97.6% on average for the quarter. So it's a hot real estate market, and all you have to do is look at other companies that ship goods, look at their quarterly earnings calls, and you will see that they have quite a bump up in inventory across the board.
Yeah, I mean, I think I looked at Tyson Foods was a prime example. I mean, their inventory levels are up like 20, 30% year over year. And they're making statements about coming out that consumers are trading down in terms of meat. Mm-hmm. And I think that's what's interesting. I think that's I don't want to say the first step, but it's definitely a sign that inflationary pressures are hitting the consumer. Things are slowing down. Guess what? Warehousing is a benefit of goods slowing down, that because all this stuff that's coming in, and I touched on this in the paper, these shippers ordered so much stuff, and you're seeing it at the ports, right? The backlogs that we have, they can't, mm-hmm. I mean, the ships effectively are acting like floating warehouses right now, and what you're gonna see is they have to go somewhere, and they're going into warehouses, and when you have a company like Prologis that's one of these, the biggest, right? Well, you look at the size, they benefit.
Yeah, I think it's a good point, right? 2021, certainly a year ago, this time, June, July, we were kind of seeing it come in. The panic ordering started a little bit before that, and you just saw a panic buying. Companies couldn't keep enough product on the shelf, and there were so many supply chain hiccups and confusion. No one knew when those goods were going to come in, so you just overbought. And I talked about it a lot. Michael Vincent talks about it a lot. You do as well. Just in case versus just in time. Is model changing? Well, it did for 2021, and these are the after effects as consumer behaviors changed in 2022. We are seeing inventories piling up. We're seeing inflation, not because of that, but we are seeing inflation anyway. And what we're seeing is slowdowns in the economy, and then trading down. Tyson Foods being the latest consumer goods company to talk about that. There's been talk with both the name brand and then kind of the generic manufacturers about consumers trading down is something that we're really seeing starting in full force right now.
Yeah, for sure. I think one interesting thing that came out of this earnings report was the e-commerce new leasing. I mean, it's 14% of new leases. It's down from 25% where it was in 2021. So, I mean, you're seeing that kind of shift back from e-commerce. And I don't think it's a surprise, especially when you start looking at those trends. We'll shift gears here a little into the LTL market. And I think what was surprising here was how strong a lot of these results were. I mean, you had a sub 70 OR in Old Dominion. You saw, we have a chart here of our LTL contract rate per hundredweight. So the rate that LTL companies are charging their shippers per hundredweight. It was up 4% on average through the second quarter. But you start digging into, I looked at 5 LTL companies. So ArcBest, XPO, Yellow, Saia, and Old Dominion. And every single one, their revenue per hundredweight was up higher, excluding fuel surcharge. So that graph excluded fuel surcharge. Every single one of their revenues were up by more than 4% in the quarter. I think Old Dominion was up the least at almost 9.5% year over year. So I mean, you're seeing that growth in revenue per hundredweight.
You're seeing it in ODFL or Old Dominion. You'd imagine, because they're probably at the top of the heap to begin with, and it's hard to grow as much as everyone else when you're probably in first place anyway on that fact. But yeah, a very strong quarter in less than truckload. You're seeing still inventory move around. You're seeing, you're seeing volumes up, certainly yields up with the price increases and the pricing power that LTL providers have. So it's a great quarter. It'd be interesting to see what the Q3 and Q4 holds, because I mean, you have very tough comps. Number one, you have the height of the 2021 rush in the second half of last year compared to recessionary-ish type of. I know it's not official recession yet, but you have a slowing economy, at least certainly a slowing economy for physical goods.
Yeah, and I think what's interesting about LTL is just that mix. It's industrial heavy, and then you've got the e-commerce side of it as well. And the industrial economy took a little while to turn on. E-commerce is definitely slowing down. But Kevin, thank you so much for joining me. That's all the time we have for this week's Research Corner. Right now, I'll toss it back over to Kaylee and Michael.